Good morning. Today is October 31st, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADMIS Senior Financial Economist. Starting with financials today, Alan.
Yep.
Alan, there's two more FOMC policy meetings this year. What will the Fed likely do at its November 2nd and December 14th policy meetings?
Okay, well, it seems very likely that the Fed at the upcoming meeting on Wednesday will hike by 75 basis points. In fact, the probability is 89% of just that, and an 11% probability of only a 50 basis point hike. But prior to recent days, in a couple of weeks ago, or as of a couple of weeks ago, there was a 98% probability of a 75 basis point hike and a 2% probability of actually a 100 basis point increase. So those chances of the Fed being very aggressive have dropped a little bit. What is more in question, though, is what we'll see at the December 14th meeting. Right now, I believe there's going to be only a 50 basis point hike at that meeting. In fact, other central banks, including the Bank of Canada and the Reserve Bank of Australia, in recent meetings have increased rates, but by a smaller than anticipated amount. So 75 basis points this week, probably only 50 basis points at the December meeting.
And I know you watch the industrial commodities closely as they also give us insights to the world economy. What is your outlook for the industrial commodities?
So in light of central banks hiking rates, maybe a bit slower than what had been perceived in several weeks ago, it still looks like central banks are going to raise rates, and it still looks like the global economy is going to weaken. So with that in mind, I think all of the industrial commodities are likely to come under pressure. Crude oil, the lumber, in general, in a weakening global economy, I would have to expect lower prices for the industrials.
Alan, a big week last week for the stock indexes. What is the near-term outlook for the stocks?
So traders now focusing this week on Fed policy. And of course, it seems very likely that they'll hike by 75 basis points. So I think with traders looking at that, that will be something that will cause stock index futures to possibly liquidate some longs in advance of that meeting. So I think the indices will have a very difficult time advancing ahead of that meeting this week. Once the meeting is out of the way, I think we'll probably see higher prices into the end of the week for the major stock index futures.
Steve, let's look at the grain markets. Wheat futures are sharply higher. Why, and will this trend continue?
Over the weekend, there was a drone attack on the Russians' largest flagship minesweeper in Crimea. So immediately the Russians shut down the Ukraine export corridor, and they started shelling major cities in Ukraine, including Kiev. So I think the market is seeing a few vessels leaving Ukraine. Ukraine can ship 3 million tons of grain per month by rail, but I doubt if any new vessels will go into Ukraine to load for grain. So wheat's up 50 cents. On Friday, the funds were short 39,000 contracts wheat, and they're covering that short. Those that talk to the funds feel that they're not going to chase these markets higher, but that was just a market reaction.
Steve, all these higher interest rates, how will grain futures be impacted by them?
Well, I think that commodity index and most commodity prices have been lower because of the concern that higher interest rates would slow economies and slow demand. We also have less China import demand because of their COVID restrictions and becoming more isolated. We think eventually South America will have good weather conditions. So higher interest rates have a tendency to be negative to the grains if the demand slows.
Big election coming up here, Steve. How will the midterm elections impact grain futures? And there's also a November 9th grain report. Which one of those will have more impact, you think?
I think the November 9th report will have more impact on the grains. The USDA could lower corn yield, but they could also lower the corn export number and raise the carryout, which should be negative to futures. In the beans, also, they could lower exports, which could raise the carryout. And maybe similar in the wheat, a small amount of drop in exports. So the report should be negative. Usually by this time in November, the market's already priced in a lot of USDA changes, but this report will have some volatility to it because of the unknown in exports. Midterm, I think if the GOP takes over Congress, that has a tendency to be positive, maybe to the grains, if they begin to work on inflation, they begin to work on increasing some of the export numbers, but it's still kind of up in the air.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.